Industries that are hot, sectors set to outperform the market. That's what's here in Zacks Industry Rank Analysis. Time to check in once again with Charles Rotblood, our senior market analyst of Zacks.com, for this little bit of analysis. And on the radar screen this week, Internet stocks. Now, Internet is a category all by itself as far as industries, correct?
Right. We do have an Internet services category, which really encompasses a lot of your pure Internet companies. We do have a few that you might think of as typically being Internet. I don't believe eBay, for instance, is in this group, but in general, your bigger names you think of, such as a Yahoo, such as a Google, are actually included in this group. It also includes some ISPs. We have United Online, which we'll talk about in a little bit, which owns Net Zero. You have Earthlink, which is in it too. But when people think of the traditional .com companies, a lot of those companies are actually within this group.
Yeah, and a lot of people, I think, have a tendency to kind of lump them in with technology, but technology is more gadgetry.
Yeah, I mean, there's a broader technology sector where a lot of people think about, and you can actually expand to include the Internet companies, but it's really important to realize that they kind of really are two different paths, because technology, a lot of physical assets, a lot depending on corporate spending, where increasingly a lot of the Internet companies are really becoming more economically dependent, and depending on how the economy performs, it affects advertising revenues. It actually affects how much consumers are willing to spend on additional services on the web. So there is definitely a relation, and the two are definitely correlated. More advances in the Internet are driven by more advanced technology, and more demand for certain products on the Internet drive demand for certain technologies, but not precisely one and the same.
Okay, and that's an interesting point. I'm glad that you clarified that for us. Well, in the Internet industry these days, certainly no shortage of news going on there with the resignation of Mr. Yang.
Yeah, Jerry Yang, the CEO of Yahoo, announced actually on Tuesday morning he's going to resign his post, and he's going to go back to his previous title of Chief Yahoo. He will serve on the board, but they are actively looking for a new CEO. The big question everybody has, will they get someone from outside the firm or someone inside? A lot of people would like to see Yahoo get someone who knows how to get things done, knows how the Internet actually works, and how to really turn things around at Yahoo to step into the post. We'll have to see what happens. But I think one of the things that investors are looking at, certainly I should backtrack for a second. A lot of people are now also looking for a possible deal with Microsoft. Jerry Yang was very instrumental in preventing a merger from occurring with Microsoft.
There is an early resignation.
and the stock has really plunged since Microsoft's offer. So there will be some pressure to get some type of deal done with Microsoft. But I think the bigger thing for investors is, rather than to speculate on if or when a deal will occur or who the new CEO will be, it's really that we're seeing earnings estimates being cut for Yahoo. And yes, some of it can be put on the shoulders of Jerry Yang and really placing the blame for his management style. But we're also looking at a weakening economy. That's affecting really advertising revenues coming into Yahoo. The Internet landscape has changed, and more competitors. Google itself has become a much fiercer competitor, much stronger cash balance than Yahoo has. So you need someone to come in here who not only can navigate the company through the current economic landscape, but can really kind of shift it and really prep it for the future.
Well, you bring up a good point. If I'm an investor and I'm looking to do some cautious shopping around for stocks now to restructure my portfolio given what's going on in the markets and the economy, why would I look to this industry for possible good buys here?
Well, I think the thing is, for investors, they need to really be careful about Yahoo. It's really a very speculative play right now, and I do think there's better companies in there. And there are companies showing some good growth. Two I highlight this week are SOHU.com and actually United Online. SOHU.com is a Chinese internet portal. They had a very strong quarter. Revenues more than doubled. Got a big boost from the Beijing games, which is to be expected. But their gaming revenues actually rose 330%. They provide a lot of online games. This is a company that's been heavily discounted because of all the worldwide economic turmoil. A lot of people are pulling money out of China, and it's actually affecting the valuations of many good stocks in China, including this company, where we're actually seeing the value of it come down. But your analysts are raising forecasts for this year and next year, and they really have a lot of positive momentum. I do talk about United Online as well. They actually they're really well known for the social networking site Classmates.com had good revenue growth this quarter. They also a net zero. That did drag them down a little bit. That's a cheap online
Provider,
ISP.
Internet provider. Yeah.
I was thinking one step ahead of me. But the other thing they actually just did in August is they bought out FTD Group, the big floral network. So now not only do they own FTD.com, but even though it's not traditionally internet, they actually have that full network of florists, and that helped drive revenues as well. So this is a company, there is a couple negatives because of their legacy ISP business, but if you kind of look at where their future growth could come from, both the FTD Group and certainly Classmates.com, there's still a lot to like about this company, and certainly analysts have raised their forecast for 2009 on the company, which is a very positive sign.
But those are individual companies. Industry as a whole might provide some allure because, what, it's ranked number 50, you told me?
It is ranked number 50. There's approximately 7, and I'm going off the top of my head, approximately 7 stocks in there. There's Zacks number 2 ranked stocks. United Online is a Zacks number 1 ranked strong buy. So we are seeing several companies with rising earnings estimates in that group. So if you're an investor and you're thinking, you know, I might want to get some exposure to the internet companies, it's really important to realize that Yahoo may not be the best play in there despite some of the speculation about what could happen. And there's really some companies in there with some strong underlying stories that are doing well despite the turbulent economic environment, such as SOHU.com, such as United Online. So I think it's good for investors to understand that Yahoo is not their only choice, and in fact, there might be better choices than Yahoo.
But the performance, as we screen and rank here at Zacks, the performance of the industry itself is showing some signs of some upward momentum.
There are, and one of the things that we should mention that this group's is ranked in the top 50 groups, and really when we look at the industry rank list, there's 220 groups in there. And really investors, I know a lot of people like to think, well, I need to focus on the top 5 or the top 10. The reality is you can drop down to the top 80 groups and still find viable stocks. Our studies have shown really stocks in those upper echelons of the industry groups, and really the upper third of industry groups, actually those stocks tend to outperform the S&P 500 much more so than if we look at the bottom half or really the lower 2/3 of the industry groups. So you don't have to investors don't have to focus solely on the top groups. They can actually go down a little bit and still find a lot of viable stocks and a lot of good investment candidates.
All right. Do you own any of those stocks that you backdoored into this conversation?
I don't own, but we do have a syndication agreement with Yahoo, so investors might want to be aware of that conflict of interest.
Content syndication?
Yes, we submit our articles to Yahoo. They're published on there, and we do have some business deals with Yahoo.
Okay. Well, thanks for bringing that and enlightening us on that. And if you have a particular industry that interests you that you would like Charles to look into, address maybe in one of these future segments, why not mail it in to us at mailbag@zacks.com, and he'll be more than happy to consider them for future webcasts. With Charles Roplat, I'm Terry Ruffalo.